So what happens when a single flashpoint halfway around the world sends the entire financial system into a tailspin? Well, this week, we got a front row seat. A crisis in the Strait of Hormuz has put global markets right on a razor's edge.
All right, let's break this down. First, we're going to look at the shockwave itself, right at Hormuz. Then we'll track how that totally hammered oil prices. After that, we'll dig into this really weird inflation picture, see how the stock market plunged into a full-on correction, and finally, we'll talk about how on earth you're supposed to think about all this volatility.
Okay, so let's start at the epicenter, the Strait of Hormuz. You got to understand, this isn't just some random body of water. It is a vital artery for the entire global economy. And this week, that artery started to get seriously clogged.
Now, what's just wild here is how fast this whole thing blew up. I mean, think about it. On Tuesday, we get the news that Iran is mining the strait. A geopolitical threat, right? But by Wednesday, we're talking less than 24 hours later, that threat becomes a brutal reality. We have confirmed attacks on 3 ships. Just like that, it went from a headline to a real-world logistics-stopping crisis.
So, no surprise here, right? You start messing with the world's most critical oil choke point, and the first thing to explode is the price of crude. The market's reaction was instant, and it was violent.
You could almost feel the panic in the halls of power. The International Energy Agency, they tried to get out in front of it. They announced this unprecedented release. 400 million barrels from strategic reserves. A massive, massive attempt to pour water on the fire.
But it just wasn't enough. The fear was too big. Even with that record-breaking release, Brent crude still rocketed past $100 a barrel. We're talking a staggering 10% jump in a single day before it cooled off just a little bit. And this is what's really driving the fear in the market. This wasn't just a glitch. The Iranian Revolutionary Guards came out with a direct warning. They basically said, if this sticks, get ready for $200 oil. They just put a brand new floor of fear under the market. The idea of a $200 barrel is now very, very real.
Okay, so let's follow this out to the next ripple and see how this energy shock completely messes up the picture for the rest of the economy. Specifically, we're talking inflation, because this week the official numbers were telling one story while reality was screaming something completely different.
So check this out. On Thursday, the US gets its official inflation data for February. And on the surface, it looks great. Headline inflation, a stable 2.4%. You'd think the market would pop the champagne on that, wouldn't you?
Yeah, but that just begs the question, right? How much does a number from last month even matter when the entire energy landscape fundamentally changed this week? It's like looking in the rearview mirror while you're driving off a cliff.
So yeah, analysts immediately called this an illusory snapshot. And here's why. First, that 2.4% is ancient history. It doesn't have a single drop of this week's oil shock priced in. And second, it was already hiding the pain people are actually feeling at the grocery store, with things like beef and coffee already up huge year over year.
So what do you get when you mix a massive geopolitical crisis with inflation data that nobody trusts? You get the third ripple, a sharp, painful sell-off in both stocks and bonds. Fear took over.
The S&P 500 officially fell into what we call correction territory. Now, that's just the technical term for a 10% drop from its recent highs. But what it really means is that a psychological dam has broken. And it wasn't a one-and-done thing either. The market dipped into correction on Wednesday and then again on Friday.
And the speed of this, it was just breathtaking. It took only 14 days, that's 2 weeks, for the S&P 500 to go from printing all-time highs to being stuck in a full-blown correction.
So if you're looking for the main culprit, look no further than the tech sector. See, when fear about energy and inflation spikes, investors dump their riskiest high-growth stocks first. Why? Well, a stock like Nvidia, its value is all about massive profits way out in the future. But if inflation is high, those future dollars are worth a lot less today. So, bam, the stock gets repriced hard and fast. Nvidia tanked over 27%, and that one stock alone was responsible for about 2 whole percentage points of the S&P 500's drop. What we saw was a classic flight to safety. Money just stampeded out of those exciting tech names and into boring defensive sectors. We're talking about the companies that you need no matter what, things like utilities and healthcare.
And that anxiety was crystal clear in the bond market too. The VTP Bund spread, which is basically a key fear gauge for Europe, it blew out to 82 basis points. That's just investors demanding a lot more money to hold what they now see as riskier debt.
So after this absolute shocker of a week,
A week that sent ripples through oil, inflation, stocks, and bonds. What's the big takeaway? How do you even begin to operate in an environment this fragile?
Honestly, this pretty much says it all. This week, the market wasn't a bull or a bear. It was a tightrope walker, and every single news alert from the Strait of Hormuz was like a sudden gust of wind, threatening to send the whole thing plunging into the abyss.
And really, that leaves us with the final thought. Right now, the job of an investor isn't to be a hero and predict the next gust of wind. It's to see the data for what it is, to understand the risks without letting fear take over, and just to move with extreme caution. In a world full of these sudden shocks, maybe the biggest challenge of all is simply to keep your balance.